What is going on YouTube? Welcome back to another video. Welcome to my channel. This is RS Trades, where we give a breakdown of the trades which I take as a up and growing and upcoming trader, someone that's just trying something different and put myself out there. So today we're going to cover a market analysis on gold. I took a position on gold this week, and I will give a bit of a trade breakdown as to where the market is currently and what direction I think it's going to head into next. So right now, if we just look from a structure perspective on gold on the daily time frame, we can clearly see we made a local top. That local top has now led to a continuation of a market which is now shifted in the trend. You can see a daily breaker structure has occurred, and we've now found some sort of local support at 4100, and currently this daily candle, which is about to close, will tell us everything about where the market is gonna go next and what conditions are set for us in the upcoming weeks. Now I will turn on my drawings and kind of give you a bit of an overview as to what's actually happening on this chart right now. So it may seem like a lot of information, but I'll break this down to you guys now. So earlier in the week, on a Monday, Tuesday or Sunday typically is when I do my technical analysis for the week prior, I saw this key zone, right? So this key zone being 4150 of gold. So we have Fibonacci support retracements held on the higher time frame bias. One being the 0.382, other being a 618. So we know within these two tight regions, 4150 provides a confluence level, which is what essentially means, in a nutshell, is an area of interest where there could be a lot of volume, liquidity, and it could be an area of interest where the hedge funds could potentially be acting at. Now, the key thing is, we look at this and we go, okay, if we know these levels ahead of time, then we're able to take action as a retail trader. The key thing is that, okay, yes, the higher people who have access to advanced trading software, they're able to manipulate the price action, but we as retail traders are like literally people who have to follow and execute their systems within this game. And the reason why I say this is because you can blow up, and you could go haywire in this kind of market conditions, and the most important thing is that you stick to your execution, you stick to your TOS, your trading operating system, which will allow you to write down, okay, when did you enter, why you entered, what time you entered, is the confluence, is the levels, is my system matching up to what the trading opportunity is presenting, what risk is there, what time frame you're trading. It's all these different variables which come into account when you're taking a trade. So okay, we'll go into a deep dive on the actual trade that I took, which is on the hourly time frame bias. So early in the week, so you could see this is the start of the week on Monday 8th of June. Monday 8th of June provides us with a level, okay, this level being a local market structure level. So we opened initially bullish, and then we sold off slightly. We retested an area of interest and we broke lower, see? So the key thing is that we look at from this perspective, okay, cool, I had known about this level. I had marked a alert at this level where essentially it was a lower low and price made a breaker structure. That breaker structure led to a continuation of the market, right? So I had entered a short position on that bias on the 9th of June in the evening, and price decided to, the following morning, hit my first 1 to 2 risk to reward profile, risk to reward take profit level. Having said that, I took partial volumes a partial volume out of the position at that level, and left the remaining volume at an overall 3-to-1 trade overall, which is essentially you risking 1 to 3. Essentially, you risk 60 pips for a gain of 130 pips. See, this is the deal. The key thing is that you look for clean setups such as this, so that you can practice and learn constantly and evolve as a trader. That's the most important thing. And you review your analysis each week so you know why and what happened. So for any new and upcoming trader, any advice I would give to you guys is that you come out your way, you build a system of rules, you follow and execute on those rules, either on demo or on live. But if you're going to do live, start with small capital. If I had to tell myself or younger self, start small, build it up slowly. There's no need to rush. And I learned that the hard way. The key thing is now I've learned from my mistakes and I'm evolving myself as a better retail investor. Going forward, the key thing is that you look at these levels, you pay attention, and you look at the economical indication, you look at the technical analysis of the market and the price action. These three things is what makes you put your edge against the market and your edge against the hedge funds, the retail traders, all those people who are jumping into the market, taking the opportunities. So you are your own boss in this game, but the key important thing is that you are able to be strict upon how you enter, what you do, what decisions you make, and are you doing it all based on what you said you were going to do. And it's all about discipline, transferring it over to what you do in your day-to-day life and applying it in this principle and in other areas of your life. If you can do that, then you will be successful. So it's about doing things that you want to do, but doing it like you love it, just like Mike Tyson says. Discipline is the art of doing something that you don't want to do, but you do it like you love it, right? So that's a key important quote. Sorry for me ranting, but yeah, this is something that I strongly believe in, and is what's helped me build myself as a person. And essentially, this is a system breakdown of what the market has shown for me this week and this opportunity, and it just goes to show that the opportunities do arise, they will come, but it's just with patience and due time. So we can see on the higher time frame bias, like I said, on the daily time frame, we can see that we made a breaker structure on the daily. We found potential support at this level, right? Because this daily close is now getting green. So we need to see where the market will tell us. But the overall direction and sentiment for this market, and I say this right now, is that we are still currently in a downtrend. In order for me to flip my bias, there needs to be a major trend shift. But right now, this trend shift is currently in a stage 4 bearish downtrend. And I don't intend to change that unless something happens internally from the price action. And that's something that I will stick by and I'll be ruled by. And yeah, that's essentially a breakdown on gold for me. Going into next week, I think the key important thing is we look at news, we look at the technicals, and make sure we're not trading red news or any key figures which happen in the key time zones. Another thing to correlate with is the dollar. So the DXY, if I can get the chart up, US dollar index, yes, okay. So yeah, so with the dollar on the other hand, so we know every time the dollar goes down, golds and metals, they typically go up. They have that correlation, right? So in this case, the dollar is slightly down today. This is why this is aided gold to be pushed up slightly. So that correlation between any time when the dollar is down, gold goes up. But when the dollar is up, when we have strength in the dollar, then gold typically goes down the opposite way, right? So I'd say for any traders who are trading gold, also look at this chart because it's an important correlation between, okay, whatever the news is happening in the economical world, alongside you knowing about the dollar and alongside you knowing about what the hedge funds and larger institutions are actually doing with the different markets. Yes, they may be manipulating levels, but the key important thing is that you act on points of interest as a trader and you enter on those bases, right? You develop your edge as a person, as a trader, and yeah, that's what it's all about. So that is my bias and weekly analysis on gold. I mean, we've taken the trade overall, which I wanted to do this week and just provide you guys with a bit of an update. And we'll do a little overview on silver right now. So with silver, we currently from all-time high. So we are also in somewhat of a similar of a downtrend with gold, as we said. From all-time high, we are currently down about 48%, I believe, from the low, 49%, but from the current close of the price action, 44%. And you can clearly see from the sharp sell-off we had, we've been in an internal range, but we've respected this, and I've marked this zone as a local demand zone. So the reason why I say this is because, okay, cool, from the 2nd of March to the end of April, we had a bearish downtrend. From April to April, end of April, somewhat of consolidation. From May till June, we had an internal push and then a sell-off. We've now respected this area, and this is a local demand zone. Now, the key important thing is on the daily time frame. Yes, we are currently down, but on the 4-hourly time frame, if this trend is actually and this low is being supported as a local demand zone, and we see the DMAs or the displaced moving averages cross up with continuous breaks of structure to the upside, testing these support levels, support resistance retracements to the downside, and if they're breaking through and the price action is going, if it's going somewhat, I'll show you guys a similar example to this. So say we get a test, a break and a push, test, break and a push, test, break and a push, that kind of price action that could lead to a continuation, right? From the hedge funds such as JP Morgan and the likes of those kind of people, they expect gold and silver to be appreciating higher. And if you think about it, these are technically long-term assets which can be held at the right times, at the right periods. So I'd say for any new investor or someone who's looking to buy silver or gold currently right now, I would say just to wait out and see what price action develops. Are we holding support? But also take into account the economical biases, and we'll just kind of see what the price action develops from here on onwards. So that is it. You guys take care, have a great wonderful week, and peace out.